Hello, and welcome to myfinancesteacher.org. It's time for our regular review of the markets, and in this video, we're going to review the precious metals, we're going to look at the general stock market, and a little bit at energy. So, starting with the precious metals, this time we're not going to have a look at the DXY, the dollar index, as over the last couple of weeks, the negative correlation between DXY and precious metals has actually declined, and it's now close to zero. So looking at the gold cycle, gold is in the daily cycle that so far has been going on for around 60 days. Usually the cycles last for about 1.5 to 2 months. So normally you would expect the cycle to finish sometime relatively soon. However, with multiple knocks at the support zone around 1850 over the last 2 to 3 weeks over here in late October and in November, I think there is a good chance that finally this support at 1850 is going to be broken. That would probably will give us a final low for the ongoing short-term daily cycle, as well as for the ongoing intermediate cycle. After all, the intermediate cycle has been pretty long. It's been going on for 248 days, and usually these cycles only last for about half a year. So it's already a very long intermediate cycle, and with the end of this ongoing daily cycle, I expect the intermediate cycle to finish as well, meaning that the next rally will be a relatively significant one, bringing gold at least above 2000 and beyond. When will this rally start? Well, if memory serves well, sometime in the middle of December we have the FOMC meeting. That historically has turned out to be a catalyst for price movements in gold. And by the middle of November, looking at the general stock markets, if they slide down a little bit, if the Fed is somewhat dovish at the upcoming FOMC meeting, then that might actually push gold prices significantly higher. Although, to be honest, I don't expect the Fed to be extremely dovish, as I don't think they have too much ammunition left. In either case, a turnaround sometime in the middle of December would give us a pretty long daily cycle, as well as the intermediate cycle, which is already long. But 2.5 months for the daily cycle is quite possible, with average duration anywhere between 1.5 to 2 months. Additionally, a decline over the next, say, 1 or 2 weeks would also give us a poke through the lower range of the Bollinger Bands. That often precedes at least some sort of a rally, and that would bring gold closer to its 200-day moving average, which I think will prove to be a formidable support zone. However, of course, nobody knows the future, and in my personal portfolio, as well as the fictitious portfolio with the members at myfinancesteacher.org, we are already allocated to a range of gold and silver related assets, although we still have a sizable cash position on the sidelines ready to add at the moment when gold turns around into the new intermediate cycle. Next, looking at the optimism index on gold, it's finally dropped lower than it's ever been, at least since early this year. It's still not that low. Usually it would be a nice, relatively low-risk buying opportunity on gold when this optimism index is much closer to this green line, around 30. So let's see if over the next 1 or 2 weeks this optimism index drops at least below 50. In either case, though, as I mentioned, signs of an upcoming low are already here. This optimism index is at the lowest since March this year. Next, moving on to the miners, looking at GDX. Back on Thursday and Friday last week, GDX bounced, but without much strength, bounced from that 200-day moving average. And looking at gold chart, as gold is already red today, although with a small red candle, I do expect GDX to finally drop below that 200-day moving average and further down over the next 1 or 2 weeks. The support zones below the current price is, of course, this 38% Fibonacci retracement. That's at around 34.5 on GDX, but that's pretty close to the ongoing price at the moment. So I think there is a good chance GDX might also decline a little bit further, possibly to that long-term support zone at around $32. That's been a long-term breakout on GDX. And that $32, $31, $32 is also close enough to that 50% Fibonacci retracement. And whenever support zones come close together at a particular price level, those usually turn out to be stronger support levels. So in the upcoming days, once GDX bounces from, let's say, $32 or $31, as that would indicate a potential rally into the new intermediate cycle, that I think would be a sign for me to allocate more of the cash towards precious metals. Next, let's have a look at silver. Interesting thing on silver is that while gold has generally been going sideways since the middle of September, silver has been moving marginally upwards, you might say. It's been moving upwards within this slightly upward trending channel. As you look at gold, gold is pretty close at the moment to its late September lows, whereas silver is slightly higher compared to those September lows. So we see a positive divergence on silver, and that is a pretty good sign. Although just like gold and miners, I do expect silver to drop over the next 1 or 2 weeks into the final end of this ongoing intermediate cycle. So although I am bearish on precious metals over the very short term, as I mentioned, possibly 1 or 2 weeks, in the intermediate and in the long term, I am sure precious metals are going to do extremely well. And as nobody knows the future, for what I know, maybe tomorrow precious metals just turn around and shoot upwards. If you don't have any positions in precious metals, it's possibly wise to have at least some allocation. And on the other hand, it's also wise to have a sizable cash position ready to add once the ongoing intermediate cycle finally finishes. Next, let's have a look at the general stock market. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. And the stock market is doing pretty well. The intermediate cycle is relatively young, and the ongoing short-term daily cycle is approaching its midpoint. It's 21 days old at the moment. Actually, today it will turn out to be 24 days old, as the intermediate cycle will turn 60 days old. So as I mentioned in my previous update, and actually I don't remember if it was public or published only for the members at myfinancesteacher.org, I mentioned that I expect the general stock market to be relatively volatile over the short term, with volatility being generated by vaccine hopes and then with increasing cases into the winter with possible lockdown concerns. But I also mentioned that volatility is probably going to trend a little bit upwards before the ongoing daily cycle becomes old enough to turn into the declining phase. Next, looking at the optimism index in the general stock market, it's pretty hot. So some sort of a cool down is quite possible, in which case you probably want to have your stop losses positioned correctly. And if you want some details on that, follow us at myfinancesteacher.org, where we currently have profitable positions on the general stock market, with the stop losses protecting those profits. On the other hand, though, as I mentioned, the upward momentum in the general stock market over the next couple of months is still pretty likely, as the intermediate cycle is relatively young, at only a couple of months old. And if you look at the previous intermediate cycle, you'll see that the optimism index reached all the way nearly to 90. And even after that, the general stock market continued to rise for a short while before giving us a top and a significant drop. Next, looking at energy, let's have a look at crude oil. Crude oil finished its intermediate cycle back in early November. So far, the new cycle is only 21 days old. So generally, I think the prospects for energy are really good. Although in the very short term, within the ongoing daily cycle for crude oil, it's reaching this resistance just below $44, the resistance based on the previous summer highs. So for that reason, what I expect on crude oil is continued upward momentum over the short term to possibly hit that resistance and maybe poke through the upper range of the Bollinger Bands before cooling down a little bit. But again, that's a short term. In the intermediate term, we are still very bullish on energy. Looking at the optimism index for crude oil, although this index has already increased to 56, I still think there is a lot of potential to move upwards. Although in the previous intermediate cycle in crude oil, this index didn't even come close to that red line. That intermediate cycle in crude oil was actually suffering a lot from a lot of lockdowns. So if we see some positive news on the economy, on the vaccines, there will be a good chance for this index to rise towards that red line and possibly poke above that. Hence, we are still bullish on energy. And looking at XLE, we've been fortunate enough to enter into a long positions on XLE relatively close to those lows. Our average entry is around $30 or so. And the general idea with XLE is somewhat similar to crude oil. In the very short term, there is possibly some cooling down, as XLE has already poked a few times through the upper range of the Bollinger Bands, and the 14-day RSI is approaching that overbought area. But in the intermediate to long term, I think XLE is going to do very well. And that concludes our overview of precious metals, general stock market, and energy. If you want to have a look at other assets, such as coffee, for example, where we recently had a nice profitable trade, why not join us at myfinancesteacher.org? You can do that by clicking this register button. For now though, I wish you a very productive and a pleasant Monday, and good luck in your trades.